Joining us now is Julia Hermann, Global Market Strategist at New York Life Investment Management. Julia, when the Iranians were striking the odd boat here and there, and I don't mean to minimize it, there were definitely strikes happening, the markets were completely ignoring it. The president came out at a NATO summit where he had been fluffed off, if you like, by the leaders, and he made some really derogatory and awful comments about Iran and said that, you know, it was very possible that we would continue striking tonight, having already struck last night. At what point do you really start to take this seriously as a strategist, that this is coming back into play again?
Well, from the strategy perspective, we're certainly already taking this seriously because it blows the confidence interval on oil pricing, the knock-on impacts on inflation, wide open. So in that sense, we are very much taking this seriously, but we also have to mind what portions of the market have shown really sensitive pricing to these conditions, to peace or lack thereof, and where has the move been more sticky? So obviously oil prices are going to be in that sensitivity bucket, but we've already seen a huge repricing in monetary policy expectations globally, and the most hawkish scenarios did sort of come off the table when we had these prospects of peace, but not entirely. And so what we're left with is a significantly less supportive monetary environment that we and consensus expected at the start of the year.
What does tech and how does tech perform during this? Because there have been past conflicts where the hyperscalers or the big tech players are seen as like a nice little cushy safety blanket. Every day now it feels like there's a violent rotation. Is tech still somewhere that you can flee to for safety in geopolitical conflict?
I worry that there's a little bit of tension between these two dynamics of this less supportive, more volatile global and monetary policy environment and the specific brand of tech leadership that we're dealing with today, which is from semiconductors. Now, semiconductors and memory in particular have always been a more volatile, more cyclical component of tech leadership. When you look at South Korean DRAM memory export prices, we're at 370% year-over-year growth from a typical cyclical peak of about 100%. And that had held firm over the last 10 years. So we're looking at above and beyond levels of cyclicality here, above and beyond levels of volatility, meeting a less supportive environment. So we see this as a recipe for ongoing volatility.
So I suppose the other question then is, can the rotation be healthy in the sense that we knock off a few, maybe even 100% of that 370% gain, and it benefits some other companies, and we're still all priced pretty much to perfection and everything is good?
It is a possibility, and that's where we see a lot of opportunities in some of those sectors that have been a little bit less loved in this very narrow market leadership environment. One of those sectors for us has been financials, and we've seen market pricing start to follow that a little bit more in recent weeks. Now, following the Fed's stress tests, we saw widespread dividend increases, expansion of buyback programs in this sector. Financials as a sector are not strapped for cash. This is a high quality area of the market. And candidly, we see an opportunity to consider things like even satellite exposures to sectors like this.
That's twice we've heard that today, right?
Yeah, instead of simply thinking about things on a pure sector basis or on a pure style basis, because we know that the AI and tech trade expands across equity sizes in the U.S. and across sectors.
To be clear, you mean like satellite to the financials trade, not like literal satellites, right?
Yes.
I mean, we're going to get the big bank earnings next week, and I think they all come on basically the 14th, and then there's some trickle afterwards. Could this be the catalyst to really reinvigorate that trade? What are you expecting to hear?
It potentially could, especially if investors are in a position where they have to look for quality, and in our perception, that really lies in strong profitability and lower earnings variability, which is found in parts of the tech sector, but of course that earnings variability has been a key marker of the semiconductor segment. So this could be a nice catalyst behind financials and other slightly more defensive sectors that simply allow investors to consider that classic investment tenet that's gotten so little love over the past 10, 15 years, and that's simple diversification, given that portfolios now have to contend with a wider range of geopolitical and monetary policy outcomes.
Julia, you're a global investment strategist, obviously. So what parts of the world are looking attractive now that Korea is finally off the boil and, currencies have been weakening and may resume so again if oil continues to rise?
Yeah, we have seen a flight to safety type bid behind the dollar. And it goes back to that more constrained monetary policy environment. The dollar has tended to do better in more constrictive global liquidity scenarios. And we're probably somewhere in a moderate level of that. So in that environment, Europe has been one of the key beneficiaries of a peace scenario and a lower oil price scenario. We're still in favor of a balanced allocation there, simply because we don't know what the path to peace is going to look like from here. There are more compelling valuation opportunities. European financials have also been strong, for example. And so we don't want to use, just moments of geopolitical stress to completely reallocate away from segments that do have a more compelling valuation backdrop.
By the way, did you hear a big sound this morning of everyone deleting their mid-year outlooks that they put out? Just like mass deletion, retract, we need to reframe it.
Ours will be out next week. So.
Very excited to read it. Julia, thank you so much for joining us.
Much.
Always appreciate your time, Julia Hermann of New York Life.